Invest, an initiative by Groww to reach out to all of you on a weekly basis with an interesting topic. Okay, so today's topic is all about ESG investing. To discuss on that, we have a senior fund manager from Quantum Mutual Fund, Mr. Chirag Mehta. So we are really looking forward to hear from you, sir. The flow of the presentation is going to be, I will start with a broad introduction to ESG as a concept, why, and how is that you can look at this fund and how do you position them. And then subsequently, Mr. Chirag will talk, take over from there. And then after Mr. Chirag, Shikhar from Groww will give you a brief insight into Groww as a platform, how can you use them, and so on. Please ask your questions after the talk of all three of us. We will take up the Q&A. We would love to answer as many questions as possible. Okay. So on that note, let's start with the presentation. So ESG as a, it's an investing theme. We all would be wondering, what is this ESG theme? In the last, say, 1.5 to 2 years, we have seen decent number of funds being launched in this particular space. Okay. So let me give you a broad introduction. Suppose as an investor, you don't have an awareness about ESG theme or whatever extra theme which is available. Let's say you generally want to invest. You're looking to invest in some stocks or some sectors. Let's take an example of Indian textile industry. Okay. When you look at India in the textile space, we are one of the largest producer of cotton. And look at in terms of polyester as silk, we are the second largest producer and fifth largest exporter of textile and apparel and so on. So Indian textile space is definitely there among the world, one of the leading producer among the world. So you would be interested, okay, then why don't I invest in textile space? That's one exciting space. But what is the challenge with respect to textile space? If you really look at textile as an industry, it contributes to 20% of global's water pollution, right? So that's a one big challenge, right? Now, other than that, if you look at some of the other interesting challenges, like if you look at Tirupur is one of the largest export hub of India, but it is also treated as one of the environmental dark spot. Why is that? Because if you see textile as a processing, in the dyeing process, it requires huge quantity of water, lakhs and lakhs of liters of water. And in the whole process, chemical gets added into the water. And then imagine as a textile manufacturing unit, you are just discharging that water back to the natural resources without treating it. Imagine the amount of the impact what it is being created on the ecology. Okay. Now, because of discharge of these hazardous chemicals, the almost 20-kilometer radius of Tirupur area is actually affected because of now groundwater bodies have been affected, the soil, agricultural land, the entire environment around it is being affected now. Now, 20 years back, farmers in that area could grow crops like rice or paddy or sugarcane, groundnuts, turmeric, tobacco, etc. But today, in the same agricultural areas, the overall cultivation itself has come down and the output has also been reducing. So don't you think this is one big challenge what the textile industry is posing towards, not just for today, but in the coming future and for our next generation? Not just that, look at textile industry, it's also labor intensive. The attrition rate in textile industry is also is pretty high. That could be a social challenge. Why there is such big attrition? Are they not caring for the society? So these are some of the questions which would start bothering to us as individuals. Now, in that case, what would you do? Would you invest your money in such textile companies? But as an investor, you might think that, then why should I really worry? As long as I get my returns, that 15-20% return or whatever return you have in mind, how does it matter? Because you don't have any such power to really check all these things or regulate all these things. Now let's understand how things have been changing and what kind of changes have already been come into this particular space with respect to the environment or society, the social aspects or the governance aspects. So we call this as sustainability. So when we say sustainability, while meeting the demands of today, you're not just looking at only today, but you're also looking at the, let's say the future generations as well. So that's why the overall concept of sustainability lies on not just only on profits, but whereas on planet and people as well. So when we say sustainable investing, broadly, it forms three pillars, that is responsibility towards environment, focus towards social responsibility, and companies following corporate governance. So essentially, when you're looking at company, investing in a company, ideally, it should be fulfilling the parameters of all these three criteria: environment, social responsibility, and corporate governance. Only then you would say, acha, once these three parameters are being met, these companies will be able to manage the sustainability, not just for today, but for future as well. Okay. When we say environmental factors, it could be with respect to energy or pollution. How are you treating your waste, which is being produced in the process of manufacturing, or how well are you preserving the natural resources? When you say social responsibility, what kind of measures has the company taken towards protecting the human rights? Are they engaging child labor or a forced labor? What are the kind of community engagement they are having, and so on? And then corporate governance. Are they really taking care of, say, minority shareholders, and disclosure norms and transparency in terms of running the company? Okay, the independence given to the board. All these factors will make a big difference. So while selecting a company, you would, or say an investor would ideally or should ideally be looking at these parameters and then start investing. But it may not be possible for us as individual investors, right? So this is where, if you see, this whole idea of responsible investing, so we call this as PRI, that is Principles of Responsible Investing, started in 2006, April 2006, by United Nations. The number of signatories, has grown from almost about 100 entities to 3,000 entities. So which are the entities we are talking about who've signed up for this PRI investing? That is, be it large asset management firms or private equity firms, sovereign funds, etc., are all part of signatories. So what they are saying is, ideally, they would be increasing their allocation towards those companies which are compliant with ESG norms. Okay, so that's a big thing, right? So today, if you see, approximately $40 trillion have been invested in ESG focused companies, or companies which are focused towards ESG. Okay, so if you look at the global allocation, a country like USA has invested 26% of the total AUM in ESG themed companies. When you look at Australia, almost about 63%, but whereas India, about 7% of the total AUM has been invested in ESG themed companies. Okay, this is where we stand today. This is based on one of the assessment by the one of the agency. But what is estimated is this 7% of the total AUM is expected to grow up to 30% by 2030. That's the estimation. That means more and more fund managers, more and more investments would start flowing towards companies which are compliant towards ESG. So then you must be thinking, okay, fine. I mean, ESG theme is all good, sounds very good, but how will it benefit me as an investor? Okay. Now look at it. It's a very interesting phenomenon. Imagine a particular company which is good on corporate governance, okay, good on disclosure norms. They're taking care of employees. They are also looking at the overall, let's say ecology around you or the environment around you. So there is a very interesting research from Oxford. Their study suggests that such companies, the companies which are sustainable or following sustainable practices, would get the benefit of lower cost of capital. That means a good company with a good corporate governance applying for a loan, they have a higher possibility of getting a cheaper loan. So that means the overall cost of capital, what we say, really comes down compared to companies which are low on ESG score. Okay, so high ESG score company, that means compliant towards ESG practices. And at the same time, these companies would have better operational efficiency. That has also been kind of included here, and better staff performance. So these are some of the benefits what the companies would get by following ESG norms. So what will it translate into? It would translate into a better return on equity compared to the companies which are not following ESG framework. Okay, so this is the one example of the general index versus ESG index, how return on equity or price to book value has been better over years. Okay. So this is the state benefit. So that means essentially what we are just trying to say is, as a company, you follow these norms, it is better with respect to profitability, it's better with respect to the overall cost of capital, and so on. Then how is it looking in India? What is the India context? If you look at now in India, we have Nifty, which has set up a separate index based on ESG, that is Nifty 100 ESG index. That means essentially out of Nifty 100 companies, that means top 100 companies means large cap. I'm sure all of you are aware. Out of this, ESG compliant companies have been selected, and there's a index which has been created. Even though it started in the year 2018, the base date is from April 2011. So that means you get to see the performance of these ESG companies versus the regular market right from 2011. So we almost have a 10-year history here. Other than that, MSCI India ESG Leaders Index also available from September 2007. So that means essentially as an investor, you can find out, okay, fine. If I want to invest, if I were to invest in ESG index or ESG as a theme, what is the benefit which stands out? One interesting benefit which stands out is, compared to the general index, regular index, it is believed that, or it is also established that ESG as a theme or ESG themed companies stand out or perform better than the regular universe of companies. So essentially, you as an investor, what could you do? How can you identify and invest in ESG companies? Because you yourselves may not be able to identify ESG companies directly, right? I mean, you and me might not have the ability to give those ESG scores or probably evaluate them and so on. So the easier route is to invest in ESG funds. So what ESG funds would do? ESG funds essentially, ESG mutual fund schemes, whatever money they collect, they invest into companies which are ESG compliant. So other than following the ESG score which is published or the index which is available, fund houses would follow their own processes and filtration process to really invest in such companies. Okay, so that's one advantage. So basically, these ESG companies are believed to have sound risk management skills. Okay, and second is, a better ESG score company would have a very interesting combination. What is that interesting combination? Risk is relatively lower, but at the same time, these companies should be able to generate better stable returns. So this is a good combination. It's not only about very high returns all the time, how much of risk involved. So it is believed that these category of companies would carry lower risk. So that's where ESG funds come into picture. Now, you as an investor, how can you look at positioning this in your particular portfolio? So ESG fund, it's generally categorized as a thematic fund because it follows a specific theme. Okay. Generally, it could be a ESG large cap fund only, or it could be a ESG multi cap fund. So basically, ESG theme could come in from large cap companies, mid cap companies, or small cap companies. You can identify and invest in any of those. Even though it's a thematic fund, you could consider this fund part of your core portfolio fund. So what is core portfolio fund? Basically, a fund which is all season, like say large cap, flexi cap, mid cap, or some of the index funds are generally categorized as core portfolio funds, which are nothing but all season funds. So in the same way, these ESG funds also could be part of your core portfolio. Okay. So on that note, I would like to conclude my part of the session. I would like to invite Mr. Chirag to take it forward from here. You're on mute, Chirag. Yeah.
Sure. Thanks, Karthik. I think that was insightful. I think you made my job a little easier. And I will run into more practical things that we look at when we look at ESG as investing. So what is ESG, right? We all talk about, if you look at the three circles on the right-hand side, we all talk about long-term returns from my investing, right? When we say, I want long-term returns, that will, or maximizing of shareholder value over the long term, that will only happen when the corporate or the company lives longer. And the company will only live longer and thrive only when it has a better societal impact, right? If it has a bad impact on the environment, if it is polluting, if it is not good at handling people, then it will not have a thriving future. Therefore, if a company has a positive societal impact, will live longer and therefore create long-term returns or long-term shareholder value for investors, right? So if we to come across various buzzwords today, right? Sustainability, responsible impact investing. So these are the new ways of investing, and overall ESG is kind of overall encompassing all these traits, right? Sustainability, responsibility, impact in terms of better companies, better outcome for the society, better outcome for the planet, and better outcome for investors. So what is all ESG about, right? Let us look at on each of the silos of E, S, and G, whether India has a issue and therefore does it impact your investment, or it's all fine. You need not take into consideration anything about ESG. These things will make it very, very clear, right? Look at the environmental side. Water, we have seen cities run out of water, right? Many cities have that chronic problem of water scarcity, right? And that's not very, very uncommon across India. Like 54% of India is under high water stress. 21 Indian cities have likely run out of groundwater availability, right? Which will affect hundreds and millions of people, right? Second is clean and affordable energy. Though we are moving towards energy for most people, at the same time, most of our energy comes from burning coal, right? And when it comes to burning coal, it is very, very carbon emissions intensive. So there is a lot of pollution because of that. So 92.5% of all our commercial energy is through burning coal, right? So we have seen, like in the likes of Delhi, there are so many deaths happening because of pollution, right? Look at climate change. We are already number 3 in total carbon emissions globally. Our carbon emissions per capita is significantly lower than the likes of China, US, or Europe, right? But still, on an aggregate basis, given the number of people that we have, carbon emissions today stand significantly larger in terms of aggregate measure, right? So if India is going to consume more because the middle class is growing and the economy is, the per capita income is increasing, we will have a massive climate change problem at hand. And I don't think that the world, when it looks at India's growth, they will say, no, it is growing, right? But at the same time, they will pinpoint that the emissions that India makes is significantly large, right? And look at the cities that we have. 22 out of 30 polluted cities lie in India, right? And it's the 5th most polluted country in the world. And if we grow, the byproduct of that growth is pollution. So is the world going to tolerate that? That's the question at hand. On the social side, we have our own problems again. About 60% of India is still below the poverty line, right? Food security, we have a problem because, 14% of population is still undernourished. And also, if you look at the population to land ratio, we still have a problem out there because the population is huge, whereas the agricultural output is not that high. So in case if we have a bad year in terms of drought, we do have stocks which are higher, but we will not be able to, there is a mismatch that we need to be concerned about. On the employment side, we again have a problem, right? Look at the employment that we need to create because of the youth population coming into workforce is significantly large. So that is again an area where we have issues. Illiteracy, about 50% of India is still illiterate. Basic hygiene, we all know Prime Minister Modi's toilet program, we are just inching towards giving basic hygiene facilities in rural areas, right? The healthcare system, COVID has challenged whatever we thought about good healthcare we have in India, right? We are struggling with hospital beds. Our hospital bed ratio as compared to other countries is very, very low. We are struggling for oxygen. We are suddenly struggling for medicines. We said that we are pharmacy for the world, but we are again struggling for ourselves. We are not even self-sufficient. So we have a problem on the social side, and we all care about economic growth, wealth, profits, but forget that the society and we are all in the same boat. If the society is not going to thrive, then the boat will sink. And on the governance side, again, this has been very, very important area for investors to be concerned about. There have been so many issues time and again that have come to fore where investors, because of bad governance, have ended up paying the price, have lost money, right? We have seen the credit rating agencies who are behind the curve in identifying problems with various groups like ILNFS, C Group, or DHFL. Right? There is again an issue of dependent independent directors. There are independent directors in a company and they are there for a reason, right? And when you have the promoters picking up friends and family as independent directors, are they really independent? Plus, we have peculiar governance issues in India because 15 of the top 20 business groups are family owned, right? And therefore, the promoter will kind of do what suits them and not to the other minority shareholders. And if you remember the audit crisis of 2018, auditors of about 204 companies resigned in that 1 year. And if you had looked at the same number a year back, it was just 18. Why did suddenly all of these auditors resign? And that was because, the onus was shifting from auditors just being a stamp on the paper to be more accountable to what they sign on. And therefore, if companies were not good at governance, the auditors were resigning. That really tells you the problem on governance with many companies in India. So what is ESG all about? It's about saying how much return I'm getting from my investment to how much sustainable return I'm getting. Because with that sustainability, you get that long-term returns assurance. As at the same time, you also get a much lower risk, and therefore that return becomes more sustainable. So what we do, what does ESG look at in each of the silos in environment? We look at how is the company preparing for the climate change that we are looking, or that's a challenge that we will face going forward. What are the pollution levels of the company? If the company is highly polluting and if it's not getting its act together, then there is a high risk that the company will face in terms of penalties. And it could also lead to shutdown of their operations. We also have to look at what is the kind of water stewardship, what kind of usage the company has in terms of water, how much is drawing from ground, and will that be a problem or not? If the company is not looking at their water sustainability, then it's going to be a problem for that company. Is the company moving towards renewable energy, or is still reliant on energy produced from fossil fuels like burning coal? What are the waste management practices of the company? Is the company dumping waste into lakes and rivers openly? Or does it have a mechanism in place in terms of disposing of its waste in the right manner, right? All this has become very, very, very important for the company's operations. It's not going to be taken for granted anymore. So if the company doesn't have all these things in right way, then the company will have to pay a price for it later. And if you're shareholders in those companies, you will lose out. Social agenda. Now, because of even COVID, the social angle has become very, very important. Like, how is the company taking care of its employees? If the company is not taking good care of its employees, then it will have to pay a price going forward, right? It will not be a thriving company. Most of the companies, the employees are the heart of that company. If they are not happy, if they are not being taken care of in terms of health, safety, and those kind of things, then the issue is it will not have a good workforce and therefore not a thriving company. For many, social ends at CSR, corporate social responsibility. It is mandatory that companies, spend 2% of their profits in CSR. So it is actually shareholders' money, which kind of, because of the law, the company is spending towards good causes, right? And if those good causes are not real good causes at the end of the day, is it justified, right? So is the company doing CSR a good CSR or not? For example, if there is a company which kind of makes donation to educational institutes where people of the rich go, is that CSR? It's not CSR. It's kind of indulging in wasteful expenses, right? What is the kind of product liability that the companies will face going forward, and are the companies ready for that or not? If the quality standards of the products that they sell are not good, then there will be liability issues going forward. Again, the privacy and data security is becoming very, very important, right? If you look at the data security issues, we all are customers of various financial institutions, and therefore, how they store our data, how they process our data, how they kind of ensure that the data is protected, that is becoming very, very important. The onus is shifting on the banks, on the financial institutions to ensure that the data of the customers remain safe. Governance, we already have spoken about. We all, as investors, are minority shareholders in a company. And when it comes to minority shareholders or as a shareholder, we are equal as to that of promoters. And our promoters treating us equally when it comes to shareholding is what needs to be seen. Or are they doing what is good for them? Or is it good for minority shareholders, right? Many times when a company used to make a sale of the company, there could be an X price for the promoters or a better deal for the promoters and an inferior deal for minority shareholders. Is that justified? That's not right. We have already spoken about board independence, executive compensation, right? That is becoming very, very important. If the CEO or MD, because of their position of their shareholding, is getting, say, 500 times or 1,000 times to that of, say, average employee in the company, is that justified? Will that company thrive in the future? And is that fair? Those are questions that ESG investing asks these companies, and these factors are having a material impact on the valuation of companies, right? So companies better adhere to the ESG norms, otherwise they will have to pay a price. So, so far, most strategies were focusing on governance, right? How good the company's management is, how good the company's board is, right? How they are treating minority shareholders, right? This was the focus of investing so far. Now, we are going beyond and asking, what about employees, society, the land, water, environment around it, right? And that is what ESG promises to deliver, a triple bottom line, something that is good for planet, something that is good for people, and something that is good for profits, right? So if you look at ESG growth over time frame, it's been one of the fastest growing investment opportunity globally. And if you look at the assets that the Karthik also spoke about, it's been growing exponentially. It's trying to get into mainstream, get as mainstream investing, right? It's no longer a thematic investment. It's trying to get mainstream. And look at the likes of investors that are getting into it, right? All big institutional investors are saying that most of my investments going forward will move towards ESG investing, right? The likes of Norges Bank, T. Rowe Price, BlackRock, Investec, Natixis, all these big investors, or the pension funds like CalPERS, they're all saying that my investments will move towards ESG in a big way. And these are the AUMs of these large groups, which are saying that incrementally more of my investments will reflect ESG investing, right? So it's huge. It's billions and trillions of dollars, right? And why are they moving towards it? Is there any reason? Is it just fashionable, a fad, and therefore they are moving into it? Or is there a reason why they are saying that much of my investments will move into ESG? Look at the estimated growth, right? We are at about $30-40 trillion globally of ESG mandates. And this, because of the surveys and because of the investment pledges that these investors have made, they're saying it's going to be by close to 150 trillion by 2035, right? Next 14-15 years, it's going to grow exponentially. Why is it going to grow exponentially, right? Is there a reason? Is there any evidence? And the evidence is that ESG works. And why do I say that? This again, the Oxford study that Karthik said, I will not spend much time about it. I will go into more examples and more evidence. But if you look at good companies, right? If they are good ESG companies, means they are doing much more than other companies are doing. And when they are doing much more, in order to be competitive, they have to innovate. And when these companies innovate and when these companies tell what they are doing, customers are more receptive to that idea, and therefore their sales grow. And therefore, given that they are more competitive, also leads to higher sales, higher profitability, and therefore better stock price returns, right? And because they are lesser risk means they are able to attract capital at a much lower cost. And therefore, again, that translates to better returns for investors. So overall, there is a high correlation between sustainability and profitability, right? Let us look at, that was generic study that Oxford did after studying more than 200 ESG or sustainability studies. Now look at the Indian arena and let's look at companies that are doing beyond, that are good at ESG, and has it reflected in their stock price returns or not, right? Let's look at Marico. Marico, we all know Marico, Parachute Hair Oil, Saffola. Those are the brands that Marico has, right? So if you look at, it is a very professionally managed company, despite very high promoter holding of Mariwara family, still it is run by a professional CEO. Majority board members are independent board members, so good governance. Much of its material is from renewable sources. 37% of it is from renewable sources. 93% of its packaging is recyclable, right? And it has implemented responsible sourcing guidelines in 2017. So it has been doing, in terms of practices, good ESG practices since a long time, right? Has the street recognized that? So look at the white line on the chart. White line is Marico, and if you look at its stock price performance vis-a-vis the likes of big companies like Lever, Dabur, Colgate, it has done much better than them, right? So this really tells you that good ESG practices are rewarded by the street in terms of better valuation. Look at another company like, for example, in the cement sector, like Shree Cement. Cement, if you know, is a highly polluting sector. About 6% of the global carbon emissions or global pollution is created by cement. So therefore, in this sector, there is a high need for companies to go beyond what they are doing. You cannot just keep earning more revenues by polluting more and more. You have to take steps to ensure that the pollution levels are lower, right? So look at what Shree Cement does is 39% of its energy is from renewable sources. They use waste heat recovery systems and solar energy, because electricity is the main polluting thing in manufacturing cement, right? They use alternative raw materials to what is known as a clinker factor in manufacturing cement to lower the clinker factor. So they use 23% of their alternative raw materials, so that clinker factor is lower and therefore lower pollution, right? All their plants comply with zero liquid discharge norms. They use air-cooled condensers in order to save water, right? And contracts with their suppliers also includes clauses on environment and social aspects of their suppliers, right? And look at Shree Cement, the white line, right? Vis-a-vis the likes of big companies like ACC, Ultratech, Ambuja, it has done significantly better in terms of price. So good ESG practices again got rewarded by the street. Look at Berger Paints, right? Berger Paints is a good ESG company in terms of it is trying to go beyond in the social sector in terms of imparting work to women in the rural sector. And that has not only given them employment, but it has given them increase in remuneration. Earlier, women in rural areas used to get about 4,000 to 5,000 rupees a month. Because of Berger Paints giving them jobs, their incomes have moved up from 14 to 18,000 rupees. The business is managed by a professional CEO, and they use environmentally friendly products in their manufacturing. So look at Berger Paints, again, the white line vis-a-vis likes of Asian Paints or Nerolac has much better price performance as compared to the others. So good ESG practices, again, got rewarded in a different sector by the market. And if you don't look at ESG factors, right? Investors have paid a price. These are the examples where there were not good ESG practices. For example, J&K Bank, where the chairman was alleged that he offered loans worth crores of rupees to people recommended by politicians, relatives, etc., right? And diverted funds from their CSR activities. So when this news broke out, it fell by about 20% in just one day, right? Look at 1% beverages, where Deloitte resigned as a statutory auditor because the company was not giving enough information, right? Stock fell by about 40% in 2 days. So there are various reasons on environmental, social, and governance front where companies don't have a good practice, it immediately reflects in the stock price. So you as investors lose out if you don't look at ESG very seriously of these companies. And it is getting very, very important day by day. So that was evidence in terms of companies, right? We saw some evidence. So we are trying to find out why all these investors are moving into ESG in a big way, right? We saw a good example of companies, good and bad, where good ESG companies are rewarded by the street, bad ESG companies are punished by the street, right? Look at look at further examples like Karthik just touched upon these, where ESG indexes did better than normal stock market index that we all follow, like the market cap weighted indexes. And one thing that I would like to highlight is not only it has done better over years and it has not one time period is contributing to performance, it has been increasing over a period of time. But importantly, when stock markets or fell, ESG fell lesser. That tells you that these are truly sustainable companies. They kind of fall lesser on the downside and do much better on the upside, right? Also in the Indian landscape, we have the Nifty Index, which again shows you the same trade. It has done better over time periods. And when markets fell, they fell lesser as compared to markets. So this is again all both ESG indexes vis-a-vis other stock market indexes like Nifty, PSC 200, MSCI. It has done over time periods better than these normal stock market indexes that we all know. So they have better long-term risk-adjusted returns, lower downside risk, tends to be lesser volatile relatively, and they are truly sustainable companies. So one thing that was not so reflective in those charts is look at the last line in this table, right? The first line we all focused that they have done better, but look at the last line. When markets fell, right? The MSCI index fell. This is the biggest fall that these indices would have seen since 2011, when markets would have fallen from their peak to the trough, right? The drawdown in MSCI India index was 22%, Nifty 100 ESG was 27%, and all others were about 28, 29%. So much more than these indices fell. So this was all evidence that, ESG works in terms of companies. The good ESG companies get rewarded in terms of better valuation and therefore better returns. ESG indexes have done well. And we'll come to ESG funds in terms of the real world example. In terms of ESG funds have also showcased, like the Quantum India ESG Equity Fund has done better than most of these stock market indexes, or better than the ESG indexes, right? So what do we look at when we look at ESG? What are the important things, and what is our ESG process, right? So Quantum as a company, right? Governance was a very important pillar of our investing, right? We call that governance as an integrity screen of when we looked at companies. And this integrity screen was put into practice since 1996. So we kind of awarded bad governed companies that kind of treated minority investors unfairly. And we also avoided spin stocks. So we kind of, in our process, in terms of our integrity screen, we had good governance practices, and we look at certain social factors that these companies followed. Came 2015, we kind of got sensitized that environment and society, social factors are becoming very, very important, right? And therefore, we kind of had our own proprietary rating methodology, or looking at ESG of companies, and developed our methodology around it to rate companies on ESG. And we kind of did it completely in-house. We built a separate team on ESG in 2015. And over a period of time, going through our learning curve, established a process on ESG in 2018. And that is when we launched the fund in July 2019 for investors to invest in ESG fund. So with that 2019, the fund that we have has done exceptionally well as compared to most of these indexes, be it ESG index or the other stock market indexes. And what we look at is not only about looking at risk, it's also about identifying opportunities. We look at how the companies fare on environment and social traits. We look at, is the company ready for the disruptive changes? We look at if the company is financially stable in terms of its growth, capital efficiency, the balance sheet strength, and we look at the governance, whether it has the good board, management, ethics of those companies are good or not. So our approach is we look at material issues, right? For a manufacturing company, environment is significantly more important. For a service company, governance is more important. So we look at importance, what is material for that company. We look at all the aspects of ESG, but we weigh it in such a way that the materiality issues are given importance when we analyze those companies. And governance is very, very important. We have seen that if a company is not good governed companies, then it will be not typically good at environment and social factors as well, right? We look at things like capital allocation decisions. We look at board composition, quality of disclosures, how the company treats minority shareholders. So in short, what we're trying to do is trying to get companies which will be long-term stewards of capital for your investor. So what we do, we look at various data sources from the company, from outside sources, and look at various ways we can get as much information on business practices of companies as much as we can. And we kind of look at these factors, these data, and evaluate that data on a holistic basis. And we come at our ranking of companies and score companies between +30 and -70, right? So that is where our score stands in terms of each company in terms of ESG. Most important thing is we kind of do not consider this as desk research. We kind of visit the plants, factories of these companies, meet the managements, meet suppliers, meet vendors, meet employees to try to evaluate the tall claims made by the company. We just don't go by what the company says, but we try to verify that information in a significant manner. And how we build the portfolio is we are not biased towards any company or any sector. We are biased towards liquidity. And if a company trades at least $1 million a day on an average for last 12 months, which is very, very liquid company, and therefore that becomes part of our universe. So our universe is about 450 stocks. And from that, we evaluate companies on ESG. So we have completed about 150 companies evaluation on ESG. And we try to, any company which is positive ESG will become part of the portfolio, right? So we end up having a portfolio of 40 to 60 stocks. And one important thing is when we build the portfolio, minimum weight assigned to the company is 1% at cost and maximum is 5% at cost. And at market value, we'll not allow it go beyond the 10% at market value. And the weights are truly dependent on the ESG scores of the company. So we want to be true to the label, and therefore the weights are assigned based on ESG score that we have. And plus we have investment and sector guardrails in place to ensure a well-diversified portfolio. So our ESG stock picking is dependent on ESG scores largely. It's value agnostic. Most indexes are value agnostic at the end of the day. It gives you exposure to quality and low volatility factors. It will tend to do well in down markets like we had seen in times of COVID. The quantum ESG fund fell lesser than normal stock market indices. And in the rebound, it has done equally well or better than the stock market indexes. So over an entire time period, over a cycle that we have seen, the down market and up market, it has done well over the entire period, right? So overall, it kind of gives you the long-term risk-adjusted returns with lesser risk, and that is what ESG gives you. And this is the evidence that people are looking over and saying that ESG will kind of become mainstream, and that is why these big investors are getting big into ESG. So with that, I'll hand it over back to you, Karthik.
I'll take over from here. Could you please stop sharing the screen? Thank you. Hello, everyone. Welcome. I will be talking to you about Groww, all the features that we offer, what's in the pipeline. I'm mainly here to take your questions about Groww. So I'll just quickly get started with sharing my screen. And finish that presentation, and then we'll open the floor to questions. Right. So as you'd all know, signing up on Groww is extremely easy. It's 100% digital. It's 100% paperless. You can sign up using your laptop or smartphone. When you open the app and you log in, this is the first screen that you'll see. There's a stocks tab, there's a mutual funds tab, there's a gold tab. And this is what we call the explore screen, where you have different options under each. So under stocks, you'll find the top gainers, top losers, other popular stocks that are being traded, all of things like that. On mutual funds, you'll find the popular funds. There'll be collections of funds. We scroll further, there'll be more such mutual funds related content. And likewise, if you go to the gold tab, you will find gold related information. Right now, we have just Augment Digital Gold, which we are partnering with for digital gold. So that is what you'll find there. Now, whenever you search a mutual fund or go to a mutual fund page, you end up on a page like this. This page has practically all details that you would require to know about a mutual fund. For example, there's returns, there's how it compares to other funds in the category, how its returns compare, who the fund manager is, what its holdings are like, all of those details, you'll find them here. Likewise, the stock page has all details related to a stock that you can find here. And likewise, you also have the same for gold. Now, in mutual funds, you can do a one-time investment or an SIP investment, which is a monthly format. So most people tend to think that in mutual funds, you can only do monthly investments and not one-time investments. This is not true. You can also invest just one time. It's comparable to FD versus RD. RD is recurring, whereas FD is a one-time thing. So in nearly all mutual funds, you can do a one-time or SIP also. This is the dashboard screen. So again, here also you have different tabs. You have stocks, mutual funds, gold. Dashboard is basically your holding. So when you tap on dashboard at the bottom of the screen and then tap on mutual funds at the top, you are basically seeing the mutual funds that you hold. Likewise, if you press stocks, you'll see the stocks that you own. And if you press gold, you'll see your gold portfolio. Now, within this, for example, in the mutual fund portfolio, if you tap on any fund, you'll be able to see two more options, which are redeem, which is take out money, or invest more, which is put in more money. And if you press on more details, you'll be able to see another page where all your transactions in that mutual fund will be visible. So how many times you have withdrawn, how many times you've added money, the amount, the unit, the folio number, all of these details pertaining to that mutual fund investment of yours will be visible there. Now, import and switch. This is one of the most popular features on Groww, very, very commonly used. Import refers to you getting mutual funds on Groww. So let's say you had invested in mutual funds that you use some other platform or you did via some other person, and you'd like to move them to Groww. That is possible using import. So go to your dashboard on the mutual funds tab and scroll all the way to the bottom, and you'll be able to see there, there'll be the import option. And once you have imported, you also have the option of switching to them. So often when you use another platform, when you invest via someone else, it might be that the fund is a regular plan fund where you're paying commission. So if you switch to direct, you will be able to skip the commission, and that gets added to your own portfolio. So you get over a period of time slightly higher returns. So the way it works is first you import your external funds and then you switch them to direct. Groww Digest daily and weekly. So we at Groww, we send two separate emails, as in one email goes from Monday to Friday. We'll be sending one today also. Today is Friday. And one goes out on Sundays. These are, we have made them in a manner such that it aids investors follow the market. It helps them understand investing. Although there is no advice here, we do not give any advice. So if you've signed up on Groww, most likely you would be getting this in your email. If If you're not, please do check your promotions folder. And you can also access this via this link that we have given here, groww.in/digest. If you have any questions for us, please feel free to write to us, email us at support@groww.in. Alternately, you can also contact us via our help and support section, which is on the app as well as website. And most people are able to find a resolution to whatever issue they might have via the help and support section. If not, you can easily raise a ticket and then chat or call with our representative. Please follow us on Facebook, Twitter, LinkedIn, and YouTube. As many of you already know, YouTube is our YouTube channel. Groww YouTube channel is an excellent resource. For new investors, there's a lot of content on stocks investing and mutual fund investing. We have also started Groww YouTube channel in multiple regional languages. So you could probably check those out too if you're not comfortable in a certain language. With that, I come to the end of my presentation. We will now take questions from everybody.
So thanks, Shikhar. Thanks, Chirag. So we have a couple of interesting questions. So most of the questions are actually directed to you, Chirag. So it would be really nice if you can throw some light on some of these questions. Okay. So the first question is, does ESG funds invest in companies from cigarette industry? For example, I mean, if you look at ITC, right? I mean, the kind of social initiatives what they've done is also pretty commendable, be it e-Chopal and so on. So would they fall under your framework?
So at least I can speak about the global practices and what we do in our fund. Usually ESG funds will avoid sin stocks. So when we call sin stocks, when we say sin stocks is about anything that deals with tobacco, that deals with alcohol, or deals with gambling kind of activities. So usually, and that is what we have also adopted at Quantum. We do not invest in sin stocks, even in the ESG fund or in other funds as well. So we do not invest in cigarette, as you said, or even in ITC per se, because bulk of their business is still coming from tobacco-based business.
Oh, not just in ESG. In general, other funds also you avoid at Quantum?
Yeah, we have two flagship strategies in equities. One is the value fund and one is the ESG fund. So in the ESG fund as well as value fund, we avoid investing in sin stocks.
Oh, okay. That's nice. So the next question is, does ESG have any additional tax benefits other than any other regular equity funds would get?
Unfortunately, no. I think it is the need of the hour, and I think there should be tax incentives. I think government should think about giving tax incentives to ESG kind of products, because it kind of furthers the triple bottom line, right? It is good for planet, it's good for people, and therefore I think it needs incentivization. But otherwise, I think there are enough inbuilt incentives even for investors to kind of look at ESG.
So we can say that the treatment would be like any other equity mutual fund, where
right.
in excess of 1 lakh rupees, you're taxable at 10% for long-term capital gains. And short-term, less than 1 year, 15% on the gains part.
Yes, that's right.
Okay. So you did really harp quite a lot on the performance, how ESG theme would stand out compared to the regular funds. But one of the viewer would like to know how last 2-3 years ESG as a theme has done, be it the underlying stocks or in general as a theme. Can you probably throw some more light on it?
Yeah, sure. I can share our experience overall. So our experience has been pretty encouraging. Since our inception in July 2019, our fund as on March and had a return of 24.16% annualized, vis-a-vis the Nifty ESG Index at 20.77 and the BSC Sensex at 16.55. So it has done significantly better and generated a lot of alpha over these indexes. And also not only the entire period of alpha is important, but you need to slice and dice, because though it's a short time period, it has gone through its own cycle, right? Because of COVID, we saw a big downward move in markets. And when markets rebounded, it kind of overshot to levels what they were before COVID, right? So it's kind of an entire market cycle on its own. And each of the phases, the ESG fund did well than the other indices. So that really tells you that ESG works. If had it been just an outperformance, you might not count to it. It's very essential that investors slice and dice into different phases of the market and see whether it works or not. And ESG has given that evidence that it works.
So, one interesting factor which I could see in one of the slide what you had showed year-on-year historical performance, especially in the downside side of the market, ESG has done actually better than the regular market.
Yes.
Any secret why they stand out, especially in bad markets, why they've done well?
So I think there is simple logic, right? Whenever there is a panic in markets and whenever markets are falling sharply, quality becomes a place where everyone wants to move. ESG companies at the end of the day are quality companies, are good, governed, well, good companies, has a financial soundness around it. And so those trades kind of attract investments at that point in time. And that I think leads to their outperformance even in a falling market.
So Chirag, in that way, can we conclude, at least based on the historical data, what we've looked at, the downside risk is relatively lower compared to other category of funds? Can we say that?
Yeah, so far, I think over a period of time, if you look at global ESG indexes or Indian stock ESG indexes, that has been a telling point, right? That it has fallen lesser than most of the stock market indexes. It has done better than other stock market indexes. So yes, I think that could be a fair conclusion, I think, to make. I don't think you're extending too much in terms of your assumptions, but given the evidence that we have seen, it looks like a fair conclusion.
Okay. Oh, nice. So you did mention about the factors contributing towards environmental aspects, corporate governance, and social responsibility. But how would you measure social responsibility of a company? Because today, if you see every company which is profitable, there is a portion of their profits they have to set aside towards CSR activities. So to that extent, I'm sure everyone is doing their job. So how would you distinguish here? How would you measure their performance?
So even in CSR, I mean, just to say that company has spent 2% is not enough, right? Where are they spending? What is the quality of that spend? Is there an impact of that spending or not? That is what investors would also like, because at the end, it is investors' money which is made, government is making companies spend towards CSR, right? So in a way, I think it is very, very important, because we have seen instances where a company was making donations to an educational institution that people of the rich were going. Is that CSR? That's not CSR, right? So you need to look at the details of that CSR spending as well. Second is, in terms of social responsibility, it's not only towards investors, it's also towards, or not only making CSR, because for many, social ends at CSR, but it's not that. It's how do you treat your employees? Do you have health and safety standards in place for your employees? How do you treat your customers, vendors, and other stakeholders whom you deal with, right? So it's also about customers, right? The data privacy, data security of the customers, right? It was passed when banks or any financial institution said it was your responsibility. Now the things are changing, regulations are changing fast, and soon it will become that it is the financial institution, the bank's responsibility to ensure that any fraud that takes place, they are equally responsible towards it. It's not only the customers or of theirs which will be responsible. So we are soon seeing those transitions where those kind of things are becoming very important. Product liability was not an issue before, but now I think investors or customers are not tolerating any product liability in terms of inferior products being given by the companies. It will pay its price down the line, and regulations are also changing on those sides. So social encompasses all these things, and we look at each of these in very, very detail, or how companies stand on each of these agendas.
So can we say that there are independent agencies, audit firms, which would actually assess the companies and then give these scores, ESG scores, and then?
No, it is not as yet. What we do is we kind of gather data from various sources and try to evaluate companies on this. There are certain disclosures that the company makes, in what is known as sustainability reports. And regulations are fast changing on that side, making companies disclose a lot of these data points. So I think we'll soon see a new format of business responsibility sustainability report, which I think is demanding a lot more data from companies. So companies, I know many companies who are not even measuring it today. So all those companies will lose out because regulations are making it mandatory, right? So it's not only looking at these disclosures will be enough. It is for us also as fiduciary or asset managers to kind of go out and verify those tall claims that are made by the companies. In the global world, there is a lot of greenwashing going on where the companies kind of state whatever they want to without even practicing a bit of it. So it is our duty to catch those greenwashing attempts and see that the company does and writes and says the same thing or not.
Wow, okay. So I'm sure then being a fund manager, you have a lot to do with identifying such companies, going through the reports in depth at your level, and then build that portfolio.
Yes. So we have a separate ESG team that looks at just measuring or looking at ESG of companies. So we have built that separate team, and we have kind of the process is still evolving, that I would say, but we kind of have got a good hang of what are the things that we need to look at in terms of identifying which are good ESG companies.
Sure. So next question is from an investor point of view. Suppose me being an investor, say I really love the theme, I would want to invest. What portion of my funds, how much allocation do you think I should give it to ESG funds in the portfolio?
So what we are recommending investors that out of your equity allocation, the ESG bucket at this point in time should be 15 and 20, because we also understand investor skepticism given this is a new area of investment, and whether they would also like to look at more evidence pile up before they kind of move their significant portion of investment into ESG. So therefore we kind of recalibrated to that expectation and saying that 15 to 20% is a good allocation in terms of ESG.
Okay. So again, the next question is to you, Chirag. So can we say, is there some kind of overlap between value style and ESG as a theme? Or you think there's no overlap whatsoever?
Yeah, so what is the main measure in a value fund is valuation of companies. They look at governance aspects as well, but the main determining factor whether the stock will make it to the portfolio or not is the valuations at which it is available today. If it is available below intrinsic value, then value funds will go into it. Whereas in an ESG fund, it is more about how good ESG company that is. And if you're true to label, then depending on how good that is, you will give a higher allocation to that company, because sustainability is the driver of returns in that fund, right? It's here the valuation is driver, here the sustainability is driver. So at Quantum, we have both the funds. We have a value equity fund and we have an ESG equity fund. And if I look at the portfolio overlap of both the funds, it just stands at 34%, which is significantly lower. So I think there could be some overlap, but I don't think there is any significant overlap between both the strategies.
Sure. Thank you very much. I think next two questions are to Shikhar, specifically to do with the products per se. So Shikhar, one of the audience would want to know, where do the mutual fund units are stored in Groww? I mean, suppose if me as an investor were to buy mutual fund units, where does it go? Will it go to demat account or will it sit in the folio? What happens?
So there are two ways mutual fund units are stored. So one is in demat, where your units would be kept in the demat form, NSDL or CDSL. And the other is what's known as the physical form, which has been the case before demat accounts came into existence. So now the thing with on Groww, we use, for mutual funds, we don't have demat, we have physical form. And physical form does not necessarily mean that the units will be, you'll get a physical paper certificate. All the transaction details, all the related paperwork is sent to you via email. So every time you transact with us, you'll get multiple emails. You'll get an email from us, the Groww. We'll be telling you what all transactions you've done. And at the same time, the AMC you're dealing with, the mutual fund you're dealing with, they'll also be sending you evidence and proof of your investment. So every time you transact, be it invest or redeem, these documents are shared to your registered email, which is why we insist, please make sure you give an email that you are regularly opening so that you have access to these, right? Now, with DMAT, we don't, on Groww, we don't have DMAT because with DMAT, there are some complications. Many brokerages that started off as a stocks investing platform, they offer DMAT, but because we started off as a mutual fund platform only at first, we have kept it in what is called the physical form. We feel that the certain kind of complications are way less. It's easier to deal with that, and when it's also with certain DMAT accounts, there are some limitations. You're not able to. I don't want to go into the details, but there are certain things that you will not be able to do.
So basically, would be held in folio format.
Yes. It's called physical format, and the evidence, the proof of your investment is shared via email.
So with respect to gold, right, I think two interesting things which are happening around right now is, one is there are now people are open towards investing in financial form of gold. And at the same time, now if you see, gold rates are actually going down. So, or gone down since last year. So how does the digital investing in gold work? I mean, especially on Groww platform, how does it work? As an investor's point of view, what they should keep in mind?
So the way the gold investment works is that you can, because it's digital, you can purchase really small quantities of gold also. You don't have to purchase large quantities. Like, it's not a large whole number. It can be like on our platform, the minimum amount to invest is actually very low. It's as low as ₹10, right? So you can invest
invest even a fraction as well, right? It's not necessary that half a gram or 1 gram.
Yes. So you don't have, it's not like you're purchasing one biscuit. You can't purchase, you have to, if you want to invest more than that, you have to purchase 2 biscuits. That's not the case. And there is actually physical gold involved. It's not virtual. Whenever you invest, there is a vault secured by an agency, which is an expert in dealing with such securities, and they keep track and store your gold. I think Mr. Chirag's fund also has a gold fund that from which you can actually collect it. If you've invested, you can physically collect the gold from. I think there are 2 cities they have this service, and I'm not sure. Yeah.
Yes,
so
Mumbai and
yeah, right. So in our case, we don't have physical gold yet, as in you can invest and it will be physically stored in the vault, and when you sell, it will be sold off from the vault. But you cannot take physical delivery yet. We are working on that. But yes, it's not fiat gold. It's real gold. When you buy gold, there's real gold taking place.
So it is not fictitious investment.
It's not fictitious. It's not.
Every penny or every rupee which is paid, correspondingly, the gold is kept in.
There is actual physical gold in the system.
So essentially, gold receipts kind of a thing. Yeah.
Yes. And obviously, I mean, this is quite, I don't probably need to say this, but I'll say this anyway. There are no making charges. There's no wastage, none of that. So it's as an investment, you either buy actual gold or you buy digital gold. Don't, if you're thinking from an investment perspective, gold chains, gold wristwatches, they're not they don't serve the purpose of investment.
Yeah, I mean, I would say marketability is getting to pay market price is one of the biggest advantage, be it in gold ETFs or the DigiGold. I think that's one of the big advantage. So one last question to you, Shikhar. I think this is one of the most frequently asked question.
Yes.
F&O, can we expect it anytime soon?
Yes. So I think I have not been able to attend these sessions for, I think, last 2 sessions. So the problem is, even before when I had come, I had said that we'll be launching very soon and it's in beta, but you have to understand with the pandemic, things have slowed down a bit. A lot of our team members, we all have family members, we're helping out. A lot of us are doing volunteer work. So things have become a bit slow. And actually, let me just go a little bit into detail. It'll help you understand how things work. So whenever we make something new and add it to the existing platform, existing infrastructure, it might happen that something breaks because you're adding a new feature, right? So in times like this, when everything, people are a bit disturbed, there's a lot of problems. If something breaks, we add something new and something breaks, fixing it becomes difficult because a lot of people are, maybe some people are unwell, they're taking care of their family. So we're unfortunately in a time when we're being a bit we're playing defensive. Our goal is to ensure that whatever is working works absolutely smoothly, and we'll take a little bit more time, but it's definitely coming. It's just slightly slowed down.
Sure. So thank you so much. Thank you, Mr. Chirag. Your session was very simple, and I'm sure everyone could really follow it. ESG as a theme is pretty exciting. I'm sure as investors would love to take exposure to ESG theme. Thanks for being part of it. Thanks, Shikhar. Thanks everyone for being part of the session. See you soon. Thank you. Have a great weekend. Stay safe.
Thank you, everyone.